Domestic gold futures fell over 1% yesterday on MCX to slip below the 50,000 mark. Let's do a three-point analysis to find out if it is the right time to buy gold. 1. What's causing the fall in gold prices? Well, gold has been witnessing a heavy selling pressure, and that's thanks to the continuous rise in the US dollar and also the increasing hopes of a successful COVID-19 vaccine. Gold prices, in fact, have fallen for the third straight day as investors continue to seek safety of the US dollar. On MCX, in fact, if you see, the October gold futures were down 1.2% to 49,764 rupees per 10 gram. As compared to the last month highs of about 56,200 rupees, gold is down over 6,000 rupees per 10 gram. The gold dollar index, in fact, has actually hit an 8-week high as well at the same time. Nish Bhatt, who's the founder and CEO of Millwood Kane International, has said that the dream run for gold has actually hit a roadblock. He also has said that the rally in the dollar index, uncertainty over the next stimulus package by the US government to really help give a push to the slowing growth rate are prime reasons behind the fall in gold prices. Now, fears of a second lockdown in Europe is also another reason for the fall in gold. 2. Is the rally in gold over? Well, gold's slump this week is forcing investors to ask whether the haven asset is taking a breather or is facing an even sharper decline. Well, the yellow metal has risen over 27%, that's year to date, and that's despite the recent fall from its peak. Now, analysts believe the fundamentals for a bull run in the yellow metal still remain quite intact, and gold is considered as a safe haven, and investors flock to it in times of uncertainty. Now, investors are keeping a close eye on the remarks from the US Federal Reserve officials on the state of the economy, which was also responsible for some volatility in the markets as well. Now, Fed officials have mentioned about the measures and the changes that could really help the small business and other areas who are majorly impacted by the pandemic as well. Also, Chicago Fed President Charles Evans has said that the central bank is still needed to discuss its new average inflation target, but that it could start raising rates before we start averaging 2%. And that's not a good news for the yellow metal as well. Additionally, the US market manufacturing PMI could also have an impact on the prices. Now, going forward, clarity on the fiscal stimulus in the US, control on the number of COVID cases worldwide, or a vaccine will definitely guide the gold prices going forward. 3. Should you buy gold at the current levels? Well, those who have actually missed the sharp rally that we've seen in gold may actually have a reason to cheer with gold prices cooling off. And here's what all the top analysts have said about investment in gold. So, Sunant Subramaniam, who's the senior fundamental research analyst at Choice Breaking, has expected that the bullion prices will decline in the week ahead, keeping in mind the fresh restrictions being imposed in the UK. Also, Sunil Kumar Katke, who's the head of commodities and currency at Axis Securities, expects further decline in the gold prices and said, looks like we may see about 48,500 rupees kind of levels on gold. Mr. Navneet Damani, who's the vice president of commodities research, Motilal Oswal Financial Services, he believes that on the domestic front, the prices could hover in the range of 49,660 per 10 grams to 50,780 rupees. And Harish V, who's the head of commodity research at Geojit Financial, has said that traders should wait for about 1 to 2 weeks before entering the precious metal.